Whether you know them for your French fries or the extra 15 pounds that you gained that one year in college, McDonald's all has a soft place in all of our hearts. But is the global restaurant icon a good investment to make today with our current investment goals of finding great assets with producing free cash flow and rewarding us as shareholders through dividends and buybacks? So today we're going to be going over McDonald's stock, their financials, dividend safety, and so much more stuff you need to know before you invest. And if you guys have ever been to McDonald's and the ice cream machine has not been working, you have to hit that subscribe button for me. With all that out of the way, roll the intro.
Hello, I like money.
So with this kind of stock analysis series that I've been doing recently on the channel, it focuses more on the quantitative measures of the business, so more like the financials, valuation, etc. If you're looking for more of a business perspective and how McDonald's actually operates their business, but I do kind of give a quick overview on it. So basically, if you guys haven't been living under a rock, McDonald's is a fast food icon across the world. They're a restaurant. Basically, they invented the speedy system or the drive-through system that we know today in the fast food itself. McDonald's sells hamburgers, french fries, chicken nuggets, ice cream if it's working. McDonald's is a worldwide brand and a worldwide company, and they have over 36,000 stores across the world and are continuing to expand day after day. Right now, McDonald's is trading at $248.31 per share with a PE ratio of 22.91. Now, this has been on a bit of a dip. McDonald's was trading near $300, which was an all-time high for the stock. Right now, McDonald's has an earnings per share of $10.84. They have a market cap of $180 billion and have a dividend yield right now of a pretty high 2.69% for them at least. The stock is down nearly 17% from its highs just a few months ago, but just because a stock has fallen a lot in a short period of time does not mean that it's at a proper value. We'll get into the stock valuation of McDonald's later in the video. Alright, to start off looking at the company financially, we're going to take a look at its revenue. Now, revenue is kind of a very broad metric when looking at a company and how they're doing financially. I prefer looking at the free cash flow that shows how much money they're actually taking back. And the revenue is kind of a cover-up for how their actual business could look. Like a company could have really good increasing revenue and increasing sales, but let's say they have high capital expenditures, research and development, etc. They're not actually getting any of that money itself and they're not profitable. Then revenue is pretty much meaningless. McDonald's has a 3-year growth rate on the revenue of 4.23%, a 5-year growth rate of 2.18%, and a 10-year growth rate of 1.44%. That's not amazing revenue growth, but we got to keep in mind McDonald's is a very mature company. At this point, there's not going to be huge, crazy growth opportunities, but we'll get into that eventually. We can see, though, that the revenue is large, it's consistent, it's been trending up over time, so that's definitely a positive thing to see. All right, let's take a look at the free cash flow. This is the most important financial metric that we're going to be looking at today. They have a 21% decline in the last year in their free cash flow. Now, this is obviously because of a bubble that they kind of hit in 2021, along with everything else. I would not view this as a negative thing whatsoever. We can see that over the long term, their free cash flow has been consistently growing. They have a 5-year growth rate on the free cash flow of 10.22% and a 10-year growth rate of 6.75%. I would pay more attention to that 10-year growth rate of 6.75%. I think that's the more realistic kind of average of all those years kind of combined. It's very deceiving to look at 1 or 3-year growth rates when it comes to the free cash flow because there can obviously be some crazy spike or some crazy decline for some companies like Target that kind of just throws off that growth rate overall. So I look and pay more attention to the 5 and 10-year growth rates of that free cash flow. And for McDonald's, with a company their size and their maturity, I think their growth rates are pretty solid for their free cash flow. Another metric that we look for in our companies is strong and consistent profitability, and McDonald's has that. They have a very strong gross margin at 57.42%, an operating margin of 47.77%, and a net margin of 35.56%. For a restaurant company, this is very strong. In fact, it looks too good. That's because it might actually be. McDonald's essentially operates as a real estate company, if you guys didn't already know. They charge their franchisees fees every month, basically to run the McDonald's and have the brand. And we can see how consistent, especially during tougher economic times, McDonald's profitability has been, and it's even been going up over time. This is definitely a positive thing that you need to see from your companies. Fees on their franchisees, yes, that rhymes. McDonald's has pricing power, they can basically hike that fee at month after month, year after year, whatever they're going to do. They can basically increase that fee over time, and the franchisee doesn't have much of an obligation. They don't have much of a right to say no. But McDonald's profitability is definitely a strong point, and they don't actually make a whole lot of money off of their food items. Yes, that's obviously a driver for sales, and that's how their business operates in the first place, but a lot of the profitability and the money is being made in the form of fees. But for a company like McDonald's' size and maturity as a business, where's the growth going to come from? Obviously, as long-term investors, we want to have good, consistent growth that will keep us pretty much in line with the S&P 500. For McDonald's, from some of the studying that I've done on the company, automation and robotics obviously is going to be a beneficiary for them, as I think it will be for all restaurants. They've already been making pretty big investments when it comes to that with their drive-thru. McDonald's is starting to experiment with robots, automation, and even have fully automated stores with less crew workers and less overhead cost. I think long-term this could be a great pathway to growth for McDonald's. During 2020, McDonald's also started this trend of having celebrity meals. So far they've had celebrities like Ice Spice, Travis Scott, Bad Bunny, and more icons across the world, and that drives in kids and customers from across the world. I was amazed of how much I was seeing people going to McDonald's and ordering these meals on social media. If McDonald's continues to do this, not only will they gain so many new customers, but McDonald's will also gain so much more social presence when it comes to the social media age. So if McDonald's continues to collaborate with celebrities on these type of meals, I think that's going to be a huge pathway to potential new growth in the future. So how does McDonald's reward shareholders for holding the stock long term? They've historically been known as a company that buys back shares and rewards shareholders very generously. Looking at their shares outstanding over time, they've had a very aggressive and very strong share buyback program. I don't know how aggressive these will continue to be at these current prices, but it will be interesting to see, especially with the recent dip that they've had. Alright, some would say that this is a dividend-focused channel, so let's get into McDonald's dividend. This is a topic of relevancy because they actually just had a new dividend hike of 9.87%, and over the last couple of years, their dividend increases have been very strong. As somebody who prides themselves as a quote-unquote dividend growth investor, this is definitely a positive thing I want to see. Now, typically their dividend growth is not this strong in the 9 to 10% range. I think the reason for this is obviously the strong year that they had in 2021, but also the recent investments they've been making in automation, robotics, and the success of the celebrity meals that I have just mentioned. They have a 3-year dividend growth rate of 9%, a 5-year dividend growth rate of 10.58%, and a 10-year dividend growth rate of 7.5%. These are very sustainable and strong dividend growth rate. In my opinion, and this is my own quote, dividends are a result of a company's free cash flow and business execution. McDonald's in the last couple of years has had very strong free cash flow growth and execution, and their dividend has been a result of that. I don't know over the long term if they're going to be maintaining a 9 to 10% dividend increase year over year, but I definitely think over time it will average out in that 6, 7, 8% range. Right now, based off of net income and after the recent dividend hike, their current payout ratio is 67.47%. Based off of free cash flow, though, I like to base my dividend payout ratios based off of the free cash flow. This is the more realistic metric, in my opinion. Their payout ratio based off of free cash flow is 78%, which is 10% higher. Now, I would expect this to average down as they continue growing their free cash flow next year, and they're going to continue this cycle, and they're going to do the dividend hikes as appropriate, though. I would expect that they maintain their payout ratio of 60 to 80% based off of free cash flow. But with a company as big and mature as McDonald's is right now, I wouldn't be too alarmed with that higher payout ratio. And they did literally just hike the dividend like 2 weeks ago, so that payout ratio right now is going to be very high based off of current free cash flows, but as they continue to grow out throughout the year, that payout ratio should go down. Alright, now let's run our models for our valuation on what a fair price could be to buy McDonald's stock. Now, before I talk about McDonald's and their valuation, I think it is important. McDonald's is one of those companies. It's a staple of a business. It is going to be around during tougher economic times. It's going to trade at a premium. These are the assumptions without the premium in it, so we can add maybe another 10, 12% premium on it. I ran a more aggressive and a more conservative for DCF. So for DCF, we put $248, which is the current share price, free cash flow per share, which is $7.45, free cash flow growth rate, which I put at 7.5%, which is basically what it's been for the last 10 years. I did it over 50-year simulation because we are long-term investors here on the channel, and a discount rate of 10.5%, which is basically a market return, and we got $199.54 for our acceptable buy price when it comes to the DCF. But McDonald's continued to grow at the 7.5% rate. I think 5 to 7% is doable for them over the next 20, 30 years, but I do think this is the more realistic calculation out of the two that I did. And for the second one, I put an expected growth rate of 4.5%, which is down 3% from the 7.5%, and we got an acceptable buy price of $121.80. Now, for my more value-oriented investors, I think the $121 is probably the more realistic number for you guys to look at. But if you're like me, you're on the younger side, you're looking for very strong businesses to invest in, the 198 is the more realistic one to go for. Also, we need to kind of factor in that premium that McDonald's does trade at. So we're going to go with that 198 metric when it comes to the DCF model. I also ran a dividend discount model, and I put an expected dividend growth rate of 7.5%, which is pretty much the free cash flow one I put in line, which I think could be doable. And I got a present value of $178.92, which is still down from today's current share price. The dividend discount model is for the more dividend-focused investors, the ones who are investing just for the dividend alone, which I don't really do. So what is my target price to add to McDonald's? Right now, I do own some McDonald's in my portfolio, and my cost per share is around $210 per share. So McDonald's is currently trading near $245. It continues dipping like this. It gets to the $230 range. You could see me nibble into it, but if it gets in the $220s to $210s range, that's definitely the price that I'm going to be looking to add more to. Factoring that market premium that they're going to give McDonald's for sure, I think $210 is a reasonable price. At the end of the day, I think McDonald's is a very strong business. I think it will offer you moderate growth over the long term. It will definitely reward you as a shareholder through buybacks and dividends. It's not going to be a crazy growth company. It's not the highest quality company you could possibly buy. With that said, though, I think it is a very high quality business with great underlying fundamentals, pricing power, and staying power through tougher economic times. I think for me, it definitely has a place in my portfolio as kind of a rock position. I want to give a huge shout out to DividendData.com for sponsoring today's video. If you guys are wondering what tool I use to research McDonald's stock, run the valuation metrics that I did in the video just there, I use DividendData.com. It saves me so much time compared to online free resources. With the online free resources, it would probably take me 2 hours to get all this information and run the calculation. With DividendData.com, it took me 20 minutes. Become a member, get access to portfolio tracking, future valuation projectors, and more valuation projectors that I showed today for 14 days free, links in the description. Let me know your thoughts on McDonald's stock in the comments section. I'm very genuinely curious to hear your thoughts. I want to thank you for making the video. If you haven't already, thank me for making this. It took a very long time to make. Hit that subscribe button for me, smash the like button, and of course, do dividend stocks, not drugs. Have a good one.